Alright, good evening and welcome back, guys. Today's session, this is the next session for today, and we've already begun a part of it. We've already seen salaries in a good way. I'm just going to go along and complete it in this session very well. So this is salaries. Some people find it very convenient to understand salaries. Some people, it's a little difficult to understand salaries, but no matter what you are, I'm going to help you to understand it much better. In salaries, guys, there are three things that you want to add: S, A and P, and there are three things that you want to deduct: S, E and P. So SAP minus SEP. This is a standard deduction that is given to everyone, maximum 50,000. People generally forget this in the exam. People say salary, okay, we'll add it, but you forget to do this. So please always remember SAP and SEP. Next is entertainment allowance deduction, not very common in the exam. And next is professional tax on payment basis, again not very common in the exam. But the first one, that is standard deduction, is the most common. You add salaries, everything on due on receipt basis except bonus, guys. Bonus is that one thing which is not on receipt or not on due basis, but whenever you receive, because you never know how much bonus you'll get till you receive it. Allowances are basically any pocket money that you get, and percocets are basically benefits in kind. We are done with this. We are done with this. We are also done with this. We've done with salaries, we're done with allowances. Now this session is all about percocets and retirement benefits. I'm just going to upload the quick book as well. Just a second. Perfect, everything looking okay. I'm just going to upload the quick book. Yes, here we go. So the quick book is here, we are also here, and this is the quick book on salaries. So what we could do is we could look at the quick book on salaries till wherever we've discussed and then move ahead. So different chapters. 1 second. Yes, here we go. Income from salaries, section 15. Guys, there are only three sections in salaries: 15, 16 and 17. Section 15 is a charging section, basically which charges salaries to tax. Income under the head salaries is computed as under: first you add the salaries, allowances which is taxable, and percocets, that is SAP, and less the standard deduction, entertainment allowance deduction, and professional tax deduction, SEP. Both the above are dealt with as under. So first they've discussed SEP. Section 16 is a deduction section. 16(1)(a) is the standard deduction which we've anyways dealt with. Section 16(1)(a). Just 1 second. That is a standard deduction of maximum 50,000. The same is an ad hoc deduction, even no amount is spent. You don't need to spend anything for that. 16(2) is entertainment allowance deduction, which we've already discussed, only for government employees. And 16(3) is professional tax, only if paid, even if paid by the employer. The following are taxable under the head salaries. First is SAP S, basic, dearness, other dearness, commission, fixed commission, bonus, others like wages, remuneration, emoluments, what are name called, guys. If you're getting money, the government is very sure and very clear. If you are making money, they also want tax. Salary is taxable on due or receipt basis, whichever is earlier. Exception bonus is taxable on receipt basis. Guys, the quick book will not miss out on anything, so it's the best book to revise whenever you are short on time. Allowances are always added first, and then exemptions are allowed as reduced from the same. HRA can demotivate and hurt heartbeat. Till hurt, exemption is based on amount spent. For heartbeat, exemption is of a fixed amount. Perfect. 1013A is the HRA exemption, because remember 13A is the house number which you have rented out. HRA is an allowance, hence it is to be added first. Then only if rent is actually paid or payable, the exemption to be reduced is the least of the following: the HRA that is received, 10% rent paid minus 10% of salary. There's a mistake here, or 40 or 50% of salary. I'll get it changed, guys. This is rent paid or 10% of salary. Just 1 second. All right. Next guys, 50% case the house is rented in Mumbai, Delhi, Chennai, Calcutta. The above calculation only for the period house was taken on rent, obviously only when you paid rent. If no HR is paid by the employer, guys, you will not add anything, and if you don't add anything, you will not get any exemption. Next is 1014, exemption from special allowances, which is basically nothing but conveyance, daily, helper, uniform, research and tour and transfer of the amount that is spent. If you see the word, that is amount that is spent. Heartbeat is a fixed amount. Hostel 300 per month per child up to 2 children. Education 100 per month per child up to 2 children. Blind etc. 3200 per month. Area based allowances, these allowances will be given. There's a huge list, you don't have to buy hard. And transport sector employee allowance is 10,000 or 70% of allowance. Any other allowance received, example servant, medical etc. will be added, but no exemption will be given. Fully exempted allowances, judges, allowances paid to High Court, Supreme Court judges, allowance paid to UN employees, and allowances paid by Government of India to Indian citizens abroad. Guys, these are allowances which are fully exempt because these are very important people. So we don't want to tax their allowances, and hence these are fully exempted. Now guys, is P, that is percocet. Percocet is nothing but a benefit. Example, you would have heard someone gives you accommodation, someone gives you a car. In all these cases of percocets, you will have to first value the percocet, and that value will be added to the salary so that the government can tax you. So that is the percocet. So here we go, let's add the percocets one after the other. Section 17 is percocet, absolutely right, Gayatri. First one, accommodation. Guys, whether it's accommodation or whether it's hotel etc., the definition of salary changes. So here salary is no longer BDC. So what is salary? Salary is everything that is taxable. So will it have basic? Yes. BDC will always be there, plus all taxable allowances. What are taxable allowances? Let's say if your allowance is 10,000 and the exemption is 8,000, then the taxable part will be 2,000. So that means, will you take S? Yes. Will you take A? Yes, but only the taxable A. And will you take P, percocets? Yes, only the monetary percocets. Guys, there are very few monetary percocets, like a gift you get from your employer is a monetary percocet. That you will add? Yes, that you will add. So you will add all the three, yes, S, A, P. All monetary payments excluding advance or arrears of salary. So you will not take two things here in the definition of salary. Guys, very important definition of salary. Again, I'll repeat once again for everyone's benefit. This definition of salary is only for accommodation calculation. Here the salary is S, A, but only taxable A, P, that is only monetary percocets, and you will include these, but you will not include two things, any arrears or advance of salary. Example, many years back you had asked for an increase, now they've increased it, so you got arrears, that you will not add, and any OD you will not add. That is very different, guys, because OD is a part of S salary, but you will not add OD. Alright, anyways, getting back to accommodation. Congratulations, your employer has given you a house, he has leased the house and he's given it to you. So is there a calculation? Yes. For government employees, very simple, they'll give you a license fee, just take that license fee and add to the employee's salary. For a private employee, the rent that is paid, because since that is leased, the rent that is paid by the employer or 15% of salary, whichever is lower, that's an our benefit, guys. Lower percocet is a benefit for us, so that's a good thing. So you will see the rent paid or 15% of salary. Guys, what if they provide you two accommodations for a while? Let's say you are also in Mumbai and you are moving to Delhi, so they give you an accommodation in both the places because movement happens gradually. You cannot suddenly overnight move to Delhi. So in Mumbai and Delhi you have an accommodation. Will you include both? For 90 days you will only take one of them, which is lower. After 90 days, if you still continue to have both the houses, then both will be included. In case accommodation is provided at more than one place because of transfer, then lower value to be taxed up to 90 days, after which both values are to be taxed as percocet. And guys, if accommodation is provided in very remote areas, example mining site, etc. Where else will you stay if they don't provide you accommodation? So in that case it will not be added. Those are two exceptions to accommodation. Please remember those two exceptions, and remember that will be the rent paid or 15% of salary, whichever is lower. But what if the accommodation is owned by the employer? Owned means there is no rent involved, so you will have to just value it. It is owned by the employer. So it depends on which city you are staying, what is the population. If the population and the city is small, that is up to 10 lakhs, then 7.5% of salary. If it is more than 10 lakh up to 25 lakh, it is 10%, and about 25 lakh like a city like Bombay or Bangalore, then it will be 15%. So 7.5, 10 and 15% of salary, same definition of salary. Next, if they provide you furniture also, guys, sometimes in a house they give you a furnished house. So accommodation you will value as per these things, and furniture, if it is rented then rent paid, or if it is owned then 10% of the original cost if owned. That is how you will add. Furniture is nothing but a movable asset. So if the movable asset is owned, then 10%. If the movable asset is rented, then 10%, then rent paid of the furniture. Next, hotel accommodation. Guys, hotel accommodation is more expensive. What is a hotel? Just one second. Sorry. Yeah. So what is a hotel? A hotel or a service apartment is something where you get a lot more facilities, and hence the value of accommodation will also increase. The value will be 25% or 24% of salary. So while accommodation normal is only 7.5, 10 and 15%, why is hotel 24%? Hotel is 24% because it's generally more facilities, so hence more value. But if you're going on if you're being transferred or if you're going for a tour, then up to 15 days there will be nothing. So let's say you're getting transferred from Mumbai to Delhi and they give you 15 days hotel accommodation, then there is no percocet. Beyond that, it will be 24% of salary. Guys, all this is accommodation, whether owned, whether leased, or whether hotel. Moving ahead. If it's gas, electricity, water. Guys, gas, electricity, water, you are enjoying and the employer is paying. Is it a benefit? Definitely a benefit. All these guys are personal benefits to you, and hence you will add them. The gas, electricity, water paid, the bill paid by the employer will be your perquisite. But if your employer only generates the gas or electricity or water, then in that case it will be the cost involved. Guys, all the perquisites will be added, and if any amount is collected from you for the perquisite, example, if they provide you gas, electricity, water and they charge you 100 rupees per month, then that 100 will be minus. So let's say the perquisite is 1000 and they collect 100 rupees from you, so then the perquisite will be 900 per month. It's almost like if I pay your lunch, if I buy you lunch and I pay 1000 rupees for it and I collect 100 from you, then your benefit is only 900. Domestic servant. Guys, this is a servant. Servant is a very derogatory term, but domestic help you can call it. If it's a domestic help in your house and the employer is paying for it, then it's definitely a perquisite. But what if instead of providing a servant they give you allowance, then it will be added as an allowance. Anyways, in both the cases it will be added to your salary itself. Education facility. Guys, what do you mean by education facility? See, first let's say you are working for a company. Let's say you work for PwC and PwC says we are sending you for an MBA, then there is no perquisite because they are going to use your services and your intelligence later on. But if they send your children etc. to an institute which is selected by the employee, that means you have selected, then the amount paid by the employer for the children will be added. That means if you say my son will go to A, B, C school and you send him to that school and the employer pays the fees, then whatever is paid will be added. But if the institute is selected by the employer says not ABC, employer, let's say SpiceJet is your employer, and he says the child will go to one school only, or it will go to my school, that is SpiceJet also has a school, let's say, so it will go to the employer run school or to a school selected by the employer, then in that case you will not take the fees of that school, you will take a fees of similar institution and you will reduce 1000 per child. And if it's not a child which is studying, then you will not minus 1000. Example, if you are working from IIM Bangalore, let's say as a CA you are working with IIM Bangalore and your spouse is doing an MBA from there, then it will be the cost of similar institution and without minusing 1000 per child per month. So I'm just repeating: education institution selected by you, then the amount that is paid. and selected by the employer or a college of the employer, then it is the amount of similar institution less 1000 per month per child, only if it is a child. If it's your spouse etc. studying, then nothing will be minus. And instead of education facility, they give you education allowance, then you know for children it is 100 per month per child, up to 2 children you can minus. Transport facility. Every time you want to travel, your employer pays the money. Of course, it is a perquisite, it will be added. If it's a business trip, it's not a perquisite, guys. Only if it's a personal trip, it is a personal benefit. But if your employer is in the railways, example, you are working for Indian Railways, or if you are working for SpiceJet, then it will not be added, because that's a part of what they do, so that has no value. Next, very important, guys, some perquisites are absolutely gold. Medical facility in India. Guys, first, for medical facility, you have to understand what is family. Family is spouse and children are always family, and parents and siblings only if they are dependent on you, they are family. So this is the definition of family: self, spouse, children always, parents and siblings only if they are dependent on you. Now, if the facility, if let's say someone is not well in your family and they are admitted to a hospital and your employer pays, if it's a private hospital, then entire thing is a perquisite. Let's say the bill is 1 lakh, the entire 1 lakh will be added to your salary because it's a benefit. But if it is a government hospital or a SpiceJet hospital or a commissioner approved hospital, then nothing will be added, please remember. And any medical insurance premium paid for employees is not a perquisite. Medical insurance, medical allowance is a tax. I'll explain this. This is a medical facility. But other than facility, guys, if your employer has provided all the employees a medical insurance, that is not a perquisite. And any medical allowance, the word allowance is anyways taxable. A for allowance, A for add. No exemptions from medical allowance. So repeating, guys, medical facility, private is 100% taxable. Government, self-managed and CC commissioner approved, then it's not taxable. And insurance is one exception. Medical insurance is not a perquisite. You are insured, but your employer pays the insurance premium. That is not a perquisite. And what about medical facilities outside India? Guys, in case of medical facilities outside India, example, you are not well and you have to go abroad for some medical facility. Again, related persons are the same. Then for the person who is ill and for one more person, the stay, the travel and the treatment are all exempt. Stay and treatment are exempt up to RBI guidelines, and travel is exempt only if your GTI is up to 2 lakh rupees. That means you should be poor. I'll repeat this, guys. Medical facility outside India. You're taken outside India, your stay and your treatment there is exempt as per RBI guidelines. But if you're traveling, that is also exempt. So how will you remember? All three are exempt, yes, but only travel will be exempt if you're poor. That means if your GTI, not salary income, but your GTI is up to 2 lakhs. If it's more than that, then it will be taxable. Motor car, we'll do motor car right in the end because there's a reason why we'll discuss it right in the end. Movable assets. Your office has a lot of movable assets. Example, a laptop, your mobile phone, your journals. If you are using them, let's say your office has given you an asset like a mobile phone or a laptop and you watch Netflix on it after coming back from office, then that is not a perquisite. They say there are 3 exceptions: mobile phone, laptops, telephone and journals. But let's say there is a projector in your office and that projector you like a lot and you start bringing it to home and you start using it, then 10% of the actual cost or the higher charges which hired will be added to your perquisite value. This is use of asset. But guys, what if you don't use it but you want to buy it? Then you will find the actual value of that asset. Let's say the value of the projector is 80,000 rupees and you have obtained it, the selling price is only 1,000, so there's a benefit of 79, which is basically a perquisite. Pretty logical, because if the asset is worth 80,000 and you get it only for 1,000, then 79,000 is your perquisite. But for this value, how do you calculate this value? You will take the cost and you will depreciate, but the depreciation is slightly different as compared to PGBP. Here the rates are different, guys. First, the rates for anything related to computer or anything having memory like laptop, iPad, etc. is 50% WTV. For motor car, it is 20% WTV, and other assets like a projector, it is 10% SLM. So 50-20 WTV, 10% SLM. So you will depreciate, and depreciation here is not less than 180, etc. It's the number of completed years. So if you buy an asset today, that is 19th March, then from 19th March to 19th March, 1 year. So every completed number of years. So if you buy an asset on 19th March 22 and you sell it on 25th March 25, then 22 to 23, 23 to 24, and 24 to 25, 1 year, 2 years, and 3 years you will depreciate it for. So it's basically completed number of years. So remember guys, movable assets, the exceptions are very important. The rates are important. Any asset sold after 10 years of being used, guys. 10 years means you have depreciated the projector and the projector has become very, very old. Now if you sell, there is no perquisite value. Also, if your employer manufactures the perquisite, example, the employer manufactures or deals in the projectors, then there is no perquisite. Very important this, just like medical facility. Lunch and refreshment, not very important guys. Whenever you are provided lunch during office hours, of course it's their responsibility to give you lunch. So up to 50 rupees, a nice simple meal, no problem. But anything above 50, example the lunch which is a lavish lunch of 500 rupees provided during office hours, then 450 will be the perquisite. Tea, coffee, snacks, thankfully is not perquisite. Otherwise every time you drink coffee, it will add to your salary. No, it's not like that. And any lunch provided after office hours or on Sundays, etc., full is taxable. There is no 50% exemption. Gifts, guys, your employer can give you gifts during the year, maybe on Diwali, maybe on your birthday, maybe on Christmas. You can get gifts. Gifts up to 5,000 per annum in kind are not taxable. Example, a small watch, a cheap watch, or some chocolates, etc., are not taxable. Up to 5,000. If it's more, then it's your option. Let's say a watch of 7,500, then there is debate. You can take any, either you can take 2,500 or you can take 7,500 entirely, no problem, the choice is yours. And if it's given in cash, then even if it's 2,000 rupees, it will be added to your salary. Credit card. You have an office credit card which you are using for personal purposes, so definitely a perquisite. So the annual fees paid by the employer and any personal purchases paid by him will all be taxable as a perquisite. You are a member of a clubhouse and your employer has paid the fees, so whatever is paid by the employer will be taxable unless the clubhouse is only used for business purposes. Loan, again very important. Guys, sometimes your employer gives you a loan. In case they give you a loan for medical purposes, then there is no perquisite. If they give you a loan up to 20,000 aggregate, then again there is no perquisite. So small loans is not a perquisite, aggregate up to 20,000, and medical loan, it's a necessity, and hence these two are not perquisites. But otherwise guys, if you want to buy a nice Royal Enfield worth 5 lakh rupees and you don't have that money and you take a loan from your employer, then that loan, let's say 5 lakh rupees, into the beneficial rate. What is the beneficial rate? How much are they charging you? Let's say 1% interest because you are an employee, and SBI on the 1st of April charges you 10%, then 9% is the beneficial interest rate, example, into the number of months in the year. If it's the whole year, then 12 months. Just 1 second. Okay. Moving ahead guys, a holiday. Guys, if you go for a business trip, then that's not a perquisite. But if you go for a holiday and your employer pays for it, that's not right. So that is a benefit and hence that will be added. But what if the employer's own guest house or own hotel like Taj Hotel itself, then whatever is the cost in the neighboring hotels will be added to your taxable value. Sorry. What about sweat equity shares? Guys, important again. Sweat equity shares are when you work in a company for a few years. Example, a lot of educators on Unacademy have been given sweat equity shares. So when you work for a company for a while, they give you some shares which are called sweat equity shares because you worked hard, you sweated out for them. Now in this case, the most important date and the most important price is the exercise date and the exercise price. The exercise date is the date you agree that you want those perquisite, those shares, and the price is the most important thing. So let's say on today, that is 19th March 2022, you agreed to buy those sweat equity shares at a price which is 55 rupees. And today's market value is 555 rupees. So 555 divided by 55 is 500 is the percocet value into the number of shares. But here guys, what if they are listed? Then you will take the listed value. But what if they are not listed? So if you take the listed, if they are listed shares, the difference between the average of the highest and the lowest price on the exercise date. So today, what is the highest price? What is the lowest price? Divide by 2, that is the average price. But if they are not listed, then you will get it valued from a merchant banker, and that will be the value to be taken. Guys, sometimes they term a period called the vesting period. Don't get confused. Vesting is how long do you work with a company before you are eligible for ESOPs. Alright. Next is LTC, leave travel concession. Guys, in India we don't go on many holidays. The government wants us to go on holidays so that we take a good break, and that's the reason the government tells the employers, that is the masters, that you all can sponsor the travel, not the stay, not the food, not the sightseeing, the travel. So let's say I'm in Mumbai and I want to go to Kashmir for a holiday. So they can sponsor my travel from Mumbai to Kashmir. They can sponsor only the travel, and that's why it's called leave travel concession. So they will pay for my travel, for my spouse, and let's say 2 children. So they will pay for 4 people. Let's say they pay 40,000 rupees. Will that be exempted? Yes, entire thing will be exempted provided some conditions are satisfied. First, what are the conditions? It can be the shortest route possible. So I cannot go to Kashmir after going to Kerala, meeting my relatives, then going to Indore, meeting my relatives, and then Kashmir. No, it has to be shortest route possible. That's what they should be paying for. Next, they should be paying for only the airfare, which is economy class, rail fare first class, bus, etc. All first class is fare, but airfare cannot be business class. It can be maximum economy class, and it can only be for self, spouse, and up to 2 children. Now here is the catch. What if I have 5 children, 4 children, 6 children? Then earlier it was allowed for all, but now it's only self, spouse, and up to 2 children. Now guys, what if self, spouse, and first you had 1 child and then you had twins? This is funny because that's not your mistake. So self, spouse, 1 child and twins, that was 3 children, but still will be allowed because twins will be considered as one set of people if born later. But instead, what if it was spouse and twins first, and then you had another child? So this one you already knew you have 4, you had 1 more on your own, so hence in that case this one will not be allowed. That means, can your employer pay for it? Yes, he can pay for it, but it will not be an exemption under section. This is basically a exemption section 1015 LTC. Guys, this exemption can be given only twice in a block of 4 years. So in a block of 4 years, you can take this benefit only twice. Yes, not every year. But in case you can't take it in a particular block because you've been so busy, then you can carry forward one of them, not both, to the next block, and next block first year. Amount paid by employer for travel to employee and family of employee and family is allowed as an exemption under 1015 for 2 journeys in a block of 4 years. One such travel can be carried forward to the first year of the next block if unutilized. Exemption for air, rail, etc. Parents and siblings if dependent. For self plus family, spouse and children, always parents and siblings if dependent. Exemption of maximum 2 children after 1st of October 1998. However, if twins, this we've already discussed, if twins. Alright. Guys, here I mentioned only self, spouse and children, but of course your family definition is wide. Self, spouse, children, parents and siblings. Guys, any value, any amount that is taken as contribution from the employee. Example, if the employee is sent for LTC, but you recover some amount from him, then that will be minused always, because employee benefit. Example, if he is given a credit card of 10,000 rupees and 1,000 is recovered, then the benefit is only 9,000 rupees. Next, your employer provides you a percocet, and not just provides you a percocet. Let's say he provides you a house whose value is 5 lakh rupees. He not only provides you a house, but so that you don't have to pay tax on it, he also pays the tax on this. Let's say 50,000 rupees. So then will 5 lakh 50 be added, and again will you pay tax on tax? No, they say in that case this will not be added back to your, so 1010cc. If tax on a perquisite is paid by employer, then the said amount will be exempt under 1010cc. Otherwise guys, it will be a vicious circle. So if a house is provided, will it be added? Yes. But if tax is paid already on that house, it will not be added again. That tax part will not be added again. Next guys, besides this, any other liability which is a personal liability of yours and paid by the employer will also be taxable as a perquisite. Any life insurance amount premium, guys, not health insurance. Health insurance is perfectly okay, because if you're healthy you can come to work regularly. But if any life insurance premium is paid by the employer, then that will be a perquisite. And guys, there are some employees who are called specified employees. There is, honestly, this definition is not important, because every employee mostly is specified employee. I'll tell you why. Because any income, any person who has salary income of more than 50,000 an annum, or having substantial interest, that is 20% or more, or being a director in a company, all these people are specified employees. And guys, let me tell you, even a peon of an office makes more than 50,000 rupees per annum. So don't worry, all these will be employees, specified employees. But they say that certain perquisites are taxable only in the hands of specified employees. So if you want, you can remember them. Educated servant transported gas, medical gas by car. Educated servant transported medical gas by car. That is education facility, servant, transport perquisite, medical perquisite, gas, electricity, water and car. Only these are for specified employees only. But honestly, I have never seen a CA inter or even a CA final paper ever talk about this, because every employee is generally a specified employee. Anyway, salary is taxable on due on receipt basis, whichever is earlier. That is the method of accounting followed does not matter, guys. As you now should know that in the entire DT, only two places the method of accounting matters. One is PGBP, where you can choose the method of accounting. Someone had asked a question before the break about income and expense account. I had told about cash account. So PGBP and IFOS are the only two heads where you can choose the method of accounting. Other than that, salary, due or receive, whichever is earlier. House property also the same thing, and capital gain whenever the asset is transferred. Employer-employee relationship is a must. Exceptions, guys, when salary is received by partners, it is not taxable under salaries head, it is taxable under the head PGBP. And when salary is received by MLAs, MPs, they don't want to be called as employees or saves, so hence that is taxable under IFOS. If you forego the salary, it still follows you. Forego means if you tell your employer, I don't want the salary, you give it away to someone else, it will still be taxable in your hands. But if you surrender the salary, S for surrender, S for stops, it will be stopped and it will not be taxed anymore. If you take a loan against the salary, loan is a liability, guys, it has to be paid back, so it's not to be added. But if you take loan or an advance against the salary, that means next month's salary I have taken in advance, that is received, and hence it will be taxable. Remember the difference, guys. If you take a pure loan which you need to repay, that is never salary. But if I tell my employer the next 3 months salary pay me in advance, that is received, and receipt or due, whichever is earlier, so it will be taxable. Salary can be full-time or part-time employment and can be for multiple employers. A director who is an employee, commission is also taxable under the head salaries. Not important. Arrears of salary taxable on received if not taxed earlier. Example, arrears is basically the strike you went on and then many years later they give you money, that is called arrears of salary. Deemed salary, which we have done in ISSD IRF, so I am not touching it again. Salary also includes profits in lieu of salary. Some amounts are not exactly like salary, but they are profits which are in lieu of salary. Example, any money that you get from Keyman Insurance. Guys, I told you, Keyman Insurance is always taxable. When the business gets it, taxable under PGBP. When the employee gets it, taxable under the head salaries. And when the family gets it, taxable under the head IFOS. Contract modification amount. If it's salary modification contract, then salaries. If it's business modification, then business. If it's other modification, then IFOS. Not really important. Guys, this we will do ahead when we do retirement benefits, Provident Fund, and also NPS. When we do retirement benefits, we will discuss both of this. Relief. Guys, sometimes you get arrears or advance salary. Example, in the year 17-18, you had asked for 3 lakh rupees extra. Your salary that time was 5 lakhs. and you had asked for 3 lakh rupees extra, which they had not paid you then. But in the year, I'll write it here only, 21-22, when your salary is 10 lakhs, they paid you 3 lakh rupees more. So now you are getting taxed in this year. This is called arrears of salary, and because of this you are paying more tax this year. So we might get a relief under section 89. Let's check how do you get that. So first is you focus on the current year. Your first step is take the 13 lakhs and calculate the tax on 13 lakhs. Second step, take only 10 lakhs, that is only this year's salary, and calculate the tax. And step 3 is find out how much extra tax you are paying this year because of that 3 lakhs. Same thing, you go to that year for which the arrears belong. In step 1, you will take 5 lakh plus 3 lakh and calculate the tax. Had you received the 3 lakhs then, what would be the tax? Step 2, only on 5 lakhs you find out the tax. And last, find out how much extra you would have paid then. And let's say the extra tax you pay now is 1 lakh, but extra tax you would have paid that time was only 10,000. So are you paying now more because of this arrears being received this year? Yes. So that 90,000 rupees will be the relief under section 89. Honestly, this is more of a math sum than a tax sum, and hence I don't see a possibility of it coming in the exam unless it is an MCQ. That's the reason, guys, my suggestion to you guys was to focus less on salaries, because sometimes people get so engrossed in these concepts which are never asked in the exam. Alright, perfect. Guys, moving ahead now to retirement benefits. I just need to make one adjustment to my camera, so I'm just going to be back in 2 minutes. If my camera goes off, don't worry, I'll be back in just 2 minutes from now. Alright, back. Perfect. This looks better. Anyways, so I'm moving ahead now to the next part. Again, guys, this part is also not asked generally in the exam, so pay attention to it, but don't go crazy about it. In case one day before the exam you can't revise this, it's perfectly okay. In fact, my suggestion to you would be finish your entire tax portion and then only touch salaries if you want. Alright, retirement benefits. Guys, what are retirement benefits? Is when you work for a company, you save money in your Provident Fund account. You don't take leaves. You work really hard in a company, so they give you some money called PF, gratuity, leave salary, etc. When you retire or when you leave the company, you get these amounts. Now, are these incomes? Yes. Will it be added to your salary? Yes. But will you get some exemptions? Definitely yes. So they are similar to allowances. Yes, they are similar to allowances because they are also added, and then you can minus an exemption. So we'll see that in this shortcut, which is called gradually people leave, retire, voluntary retire post service. So one after the other, guys, we will look at the retirement benefits. First, we will look at gratuity. Guys, in India, when you work in one company for many years continuously, they become very happy that you worked with them and that you've been a slave for them for many years. So they give you a big thank you, and this big thank you is called gratuity. They keep putting money in a separate approved gratuity fund account, and when you leave, you get that money, you get a nice check. Let's say you get a check of 25 lakhs. So will this 25 lakhs be first added to your salary? Yes, it will be added, and then you will get an exemption which is least of the following. Watch out, guys, what is the least of the following? First, always, guys, is the gratuity that you receive. So that is example 25 lakhs. Then next is the statutory limit. Statutory limit means a fixed limit. I told you it's a big thank you, so the limit is big, that is 20 lakhs. Also, this limit means that you will not get an exemption more than this limit because the least of the following, and in least of the following they have given 20 lakhs. So if all the other amounts are bigger, still your exemption will not be more than 20 lakhs. So that's the limit they have kept. And third, it's half month salary, 15 by 26. Guys, 15 days in a month and 15 days is half, and 26 days in a month, working days besides Sundays, into last drawn BDOD. Guys, basic, dearness and other dearness, into completed number of years which is rounded off. this is what you'll have to calculate, guys. This is something that people get confused with. Try and understand, it's half month salary, and salary here is BDOD. Generally it's BDC, but this time it's BDOD, and into completed number of years, rounded off. Rounded off means if it's 22 years and 7 months, then it becomes 23. If more than 6, then it becomes the next year. So between these three, whichever is the least, you will minus, and that is your gratuity exemption. This one. But if you're a government employee, congratulations, you don't have to do any of this. So full amount is exempt, the entire 25 lakhs is exempt, and hence the surgeon loves government positions, because gratuity is completely exempt. That is, surgeon loves government position. We'll keep coming back to that shortcut. Surgeon loves government positions. G done, gratuity done. Next, people is pension. So for that, I'm going to the next page. Pension is, yes, here. I've discussed it in different parts, but it's one and the same. Gradually people is pension. Guys, everyone pay attention to pension. It is important. What is important? First, monthly pension. Guys, in India, we are very used to seeing older people get pension, government employees getting pension. If it's monthly pension, then it is such like salary. It is taxable. You get a 50,000 standard deduction. Everything is the same if you get monthly pension. But what if you don't get monthly pension? What if you get a lump sum pension? Lump sum pension, guys, the name is slightly different. They call this commuted pension. Lump sum pension is also called commuted pension. Commuted means you're collecting it together and you're getting it. And let's say the commuted pension is 10 lakh rupees. So is it compulsory to get commuted pension? No, it's your option. If you want a big expenditure to be made, and if you want lump sum money to start a new business, you can commute it. And let's say you have commuted, this is a slightly different. Let's take 8 lakhs. And that is 80% of your pension you have commuted, and you got 8 lakhs. So your total pension is 10 lakh rupees. How do you count that? If 80% is 8 lakh, then what is 100%? That is 10 lakhs. So your total pension is 10 lakh, and the exemption will be 50% of your 10 lakh, that is 5 lakh will be the exemption. So I repeat, for pension, guys, a monthly pension is always taxable for everyone. Commuted pension, that is lump sum pension, for government employees is exempt. So hence surgeon loves government positions. That government positions is P is pension, and anyways it is half the total pension. So it's half the total pension. But if it's a government employee, it's half the total pension. But if you're already getting gratuity, guys, that means if you're already rich, then you will get only 1/3 of this. So only 1/3, that is 3,33,000. So I repeat, always monthly pension taxable. Lump sum pension for government employees exempt. For other than government employees is half. And if you're already rich, that means you're already getting gratuity, then this will be 1/3 of the total pension. Always remember the percentages of the total pension. Not the most important, guys. I have not seen these retirement benefits ever asked, but still try and see how much ever you can. Don't confuse yourself one day before the exam on this. Don't waste your time on this unless you finished all the other chapters. Okay, anyways. So gradually people leave. Now is leave salary. Here we go. Leave salary. Guys, if you're always around in office, that means you never take leaves. Then at the end of when you retire or when you leave the company, you can be given a money in exchange of that leave. So that is called leave salary. And let's say you get a check of 15 lakh rupees. So will it be added first? Yes. And it will be minus will be least of the following. What is least of the following? Let's see. First, amount that is received. Whatever amount that you've received. Second, it's a statutory limit, but here the statutory limit is small, but is only 3 lakh rupees. Yes, 3 lakhs. And third is basically your 10 months average BDC. So what is 10 months average BDC? Whichever month you're retiring or you're leaving, that before that you count 10 months and you do an average BDC. What if my BDC is not changed in that time? Then average will be the same. what if your BDC is 1 lakh? So 1 lakh into 10 divided by 10 will be same 1 lakh. So if it's not changed, don't worry about average. And this you multiply into 10 times, or this you multiply into the leave spending in terms of months. What is this? Let me explain what is leave spending. Leave spending is basically how many ever were your total leaves in all the years that you worked. So let's say you worked for 20 years and the leaves every month was 42. You cannot take 42, maximum you will get only 30 for this calculation. So 600 total leaves. Out of the leaves, how much have you already availed or how much have you already encashed? You can minus. So let's say you availed and encashed almost about 510 leaves you already encashed. So 90 leaves pending, and 90 leaves you have to do in terms of months, so that is 30, so into 3. So this is basically the leaves pending in terms of months. Months means divide by 30. So I repeat, amount received or statutory limit of 3 lakh or average 10 months average BDC into 10 into leaves pending by months. This will give you leave salary. And remember, surgeon loves government position, L for leave, L for loves. For government employees, the entire leave salary which is given is exempt. So the shortcut, guys, going back to the shortcut, gradually people leave, next retire, voluntary retire, post service. There are a couple of them and then it will get done. Next is retrenchment. Guys, what is retrenchment? Something very sad happens, that sometimes companies, industries shut down. Here it is, retrenchment compensation. No, this is voluntary retirement, this one. Sometimes very sad thing happens that sometimes companies, especially industries, shut down and workers are left unemployed. In that case, the Industrial Act says that you should pay them some retrenchment compensation. So retrenchment compensation, let's say an employee is unemployed and he is paid 8 lakh rupees of retrenchment compensation. Will it be added? Yes. An exemption will be given, which is least of the following. So again, guys, first is amount received, which is 8 lakhs. Statutory limit somewhere here is midway, not even very small, not even very big, that is 5 lakhs. And third, retrenchment is very similar to your gratuity. So in that case, this case also it is 15 by 26 into, guys, one thing will change here, two things will change here. It is BDOD into completed number of years, but two things, we'll do the same thing, but two things will change here. It becomes 3 months average BDOD, and completed number of years is not rounded off, it is only completed number of years. So these things change. 1 minute. 3 months average BDOD. I think there's a mistake here, so we'll cancel it out. Okay, so here these are two things that will change. Perfect. And this is very similar to gratuity, which is covered by POGA. Guys, I did not tell you about it, but there are two kinds of companies. One are covered by the Payment of Gratuity Act, POGA. Why? Because if they are not covered, people will not pay gratuity. Gratuity is something that people consider as a burden. Why should I pay an employee extra? So hence covered by POGA. And if it's not covered by POGA, then the gratuity calculation changes a little bit. I'll show you that as well. Instead of 15 by 26, I'll show you first original one, 15 by 26 into BDOD into a completed number of years rounded off. And if it's not covered by POGA, let's see what changes. It becomes 15 by 30. So one change. Then BDOD becomes average BDC, 10 months average BDC, and completed number of years becomes not rounded off. So these things change when it is not covered by POGA. Generally in the exam, even if it comes, it's POGA. Yes, BDOD into completed number of years. Gayatri, just 1 second. Let me just check that bit. Anyways, not POGA. I will come back to you guys. I will clarify not POGA, but I don't think that is the right one. But just remember, for non-POGA, it is 15 by 30 into completed number of years, which is not rounded off. These are two things which are very sure. This one, BDOD or BDC, I'll just confirm with you again, because there's a change here in non-POGA and POGA. Alright. Anyways, coming back. Gradually people leave, retire, voluntary retire. This is slightly important as compared to the others. Now what is voluntary retire, guys? Sometimes companies give an option that if you want to voluntarily retire, you can retire. They'll give you a lump sum amount so that they don't have to pay you salary, and you can do that, but you'll feel bad. You look behind of how many years you spent in the company, and you look ahead also, so you will see behind and see ahead. And let's say you get 21 lakh rupees on voluntary retirement. Will it be added? Yes. And you'll minus least of the following, which is first, what is the least of the following? Again guys, here also it is amount that is received always. Retrenchment and this have the same statutory limit, that is 5 lakhs. You will look behind also and you look ahead also. So your salary, that is BDC, and you will look behind, that is completed number of years into 3, and you will look ahead also, BDC, into number of months left till retirement. So that's how you will see behind is completed number of years into 3, and see ahead, that is number of months till retirement, and that is how you will get 1010C, that is voluntary retirement. I'll give you the sections later. Sections all flow in one pattern only, don't worry about the section. Just right now let's understand all the different elements. And remember the section guys, surgeon loves, gratuity was exempt, commuted pension was exempt, leave salary was exempt. S is statutory provident fund, which we will see soon. Alright. Next is P, that is Provident Fund. Very important guys. One of the most important is Provident Fund. Let's see what is Provident Fund. Guys, Provident Funds are actually of 4 kinds, but right now in salary we discuss only 3 of them. One is Statutory Provident Fund. In Statutory Provident Fund, when your employer contributes money, that is exempt. Why? Because the government says we get to use the money and hence it is exempt. When you earn interest on this money, that is also exempt, and when you remove that money also, that is exempt. That is your SPF, clearly the best one, because E benefit is there. Now when it comes to recognized provident fund is most companies which are big companies, they follow recognized provident fund other than government companies. Here again it is EE, but subject to 3 conditions which we will see. First one is E, exempt, but up to 12% of salary. That means if your salary is 10 lakhs, then if he contributes 1 lakh 50, only 1 lakh 20 will be exempt, so only 12% of salary. Interest is also exempt, but only up to 9.5% interest, and exempt is also exempt, withdrawal is also exempt only if it is after 5 years. So I'll repeat, there are 3 E's. Again this is also EEE, but subject to conditions. 12% of salary, 9.5%, and withdrawal only after 5 years. What if you withdraw within 5 years? Then it's taxable, unless there is an unemployment situation, you are unemployed because the company shutting down or you getting some grave illness, and there is an unrecognized provident fund which the government does not recognize, which the government does not use the money. This is almost like the employer creating a drawer in office and putting the money in that drawer. When the employer contributes, there is no exemption, nor even it's taxable, because the government doesn't know where the money is. In the drawer, if there is interest, again you will not be taxed, nor will there be an exemption, because again you have not got any money. And finally, when you leave the company and he opens the drawer, your employer, and he gives you money, that means you receive the money, then it will be taxable completely. Yes. Why no exemption? No exemption because the government has not got to use the URPF. URPF is unrecognized, no one has used it. If the government has not used it, why will they give you this exemption? So guys, these are the 3 provident funds. And remember, government surgeon loves government positions, gratuity, pension, leave salary, and SPF. All those 4 are exempt for government employees, and hence the surgeon loves government positions. Alright, and these are the 3 provident funds: statutory provident fund, recognized provident fund, and URPF. Alright, just taking you to back and just putting the sections now. Guys, gradually people leave, retire, voluntary retire, post service. S is left, superannuation. I'll tell you, superannuation is very simple. First is gratuity, that is section 1010. You start off with that. pension is 1010A. Leave, you're always around, so 1010AA. Retrenchment is a bad thing because people are fired, so 1010B. VRS, you look behind, you see behind and in front, so 1010C. Provident Fund is 1011, and this is Superannuation Fund. This is not important, even the section is not important, but I'll just tell you what is Superannuation Fund. Guys, just like how you have an account with SBI, so you don't want an account with HSBC because it's a foreign bank. Why? I can save money in SBI. Same way, because you have Provident Fund, people generally don't save in Superannuation Fund, but it's just similar work. Superannuation Fund is also a retirement fund. In that, if your employer contributes up to 1,50,000 rupees per annum is exempt. So if an employer contributes 1,62,000, then 12,000 will be taxable, remaining will be exempt. That is not really the most important, but you should just know what is Superannuation Fund, and this is basically a section called 1013. Alright. Perfect. Guys, now the government has made a new rule, very simple rule, which says that in case your contribution to the Provident Fund, your contribution to the Superannuation Fund, and your contribution to the National Pension Scheme, if all these three benefits you are getting and your contribution is more than 7.5 lakhs. Example, let's say you're a CEO of a very big company and your employer, let's say you're the CEO of Unacademy, and Unacademy contributes to your PF account also, SAF also, and National Pension Scheme also, and the contribution is more than 7.5 lakh rupees, then the government says, listen, we will not be able to give you such a huge exemption. Let's say Unacademy contributes 10 lakh rupees for the CEO, then up to 7.5 lakh rupees, no problem, but the remaining 2.5 lakh rupees will be added to the salary. Yes, this has been a recent change, and not just this, even the interest on this will be added to your salary. So repeating, guys, is PF exempt? Yes, up to 12%. Is SAF exempt? Yes, up to 1.5 lakhs. And is National Pension Scheme exempt? Also yes, up to 10% of salary. So these three individually are exempt up to certain limits, but if the amount in all these three are more than 7.5 lakhs, for example, let's say 10 lakhs, then the excess will be taxable, and even the interest on the excess will be taxable. Perfect. Guys, I would strongly advise you that don't get into the interest calculation, etc. Gently reminding you, at CA Inter DT is only 60 marks. They will not make it a maths problem, they will make it a tax problem. So focus your energies on things that are required and not on things that are only mathematical. Areas of salary, interest of salary is just 6 calculations which they will have to give you about 8 to 10 marks. So it's better you save your energies for MCQs on this, and you save your energies for other chapters rather than salary. That's my honest suggestion, considering all the years that I have seen the examination questions are very easy on salary. People, when you see examination question, you'll know what I'm talking about. Anyways, so here it is. This is taxability of sweat equity shares, which we will see in TDS section. And now I want to open up to the salaries book, guys, from the module. So just give me 2 minutes. I'll just open up the module salaries. Here we go. And also it's been 1 hour and 5 minutes. So we'll take a 5-minute away. We will come back and we will look at all the module questions. We'll see what is being asked, what is the pattern of thinking they want you to question. But remember, SAP minus SEP is the more important one. So 5 minutes and we are back. Thank you. Just a second. Alright, here we go. Guys, looking at the salaries questions, all the module questions, let's try and do. It is a big chapter. Perfect. Guys, only the questions given in yellow are to be done, so I'm just doing the first one. Let's try and see how we are able to do this. Everyone on the screen. Miss Rakhi is an employee in a private company. She receives the following medical benefits from the company during the previous year 21-22. Guys, this is on medical allowance or medical percocet. If it's an allowance, it will be added, and if it's a percocet, remember private is already added, always added. For government, for self-run and for commissioner approved, that is not a percocet. Let's try and do this. First, guys, I want you all to try this once. I'm giving you all 2 minutes. Everyone try this once. If there is anything which is taxable, you can keep a note of it and total it up. Examine the taxability of the above benefits and allowances in the hands of Rakhi. Over to you all. I want you all to try before we do this together. It's a good sum, and it should test your knowledge well. 2 minutes to you all before we start doing this together. Alright, let's do this together, guys. Reimbursement of the following medical expenses incurred by Miss Rakhi. So she has incurred the expense and now she is getting the money back on treatment of her self-employed daughter in a private clinic. Guys, the moment it is private, this one will be taxable. On treatment of herself by a family doctor. Guys, again, family doctor is private, so this is also will be taxable. On treatment of her mother-in-law dependent on her in a nursing home. Guys, first of all, mother-in-law is not relative and it is a nursing home, that is private, so again it will be taxable. Payment of premium of Mediclaim policy taken on her health. Guys, this one is exempt because mediclaim is exempt. Life insurance is a percocet, or mediclaim is exempt. Medical allowance, guys, any allowance will you add? Yes, into 12, that is 24,000 will you add. And will you minus anything? No, it is not a part of HRA, can demotivate, hurt, heartbeat. Medical expenses in reimbursed on a son's treatment in a government hospital. Son is a relative and government hospital, this one will be exempt. Expenses incurred by the company on the treatment of her minor son abroad, including stay, is 1,95,000 is treatment and stay, and foreign travel is 1,20,000. Again, this should be within RBI limits, and this should be if her GTIs are less than or up to 2 lakh. The limit prescribed for RBI for expenditure on medical treatment and stay abroad is USD 2,50,000 per financial year. So US dollar 2,50,000 is a lot of amount. So this entire thing will be exempt. And assuming, guys, if her GTI is up to 2 lakhs, even this one will be exempt. Let's check our answer. 485 is taxable. 4 is taxable. 8 is taxable. 5 is taxable. Medical insurance premium is not a percocet, tax-free percocet. Medical allowance is taxable fully. No, nothing can be minused. Reimbursement of medical hospital in a government hospital is a tax-free percocet. Next, the expenditure on medical treatment and stay would be excluded from percocet, so it will not be taxable. Expenditure on travel if a GTI does not exceed 2 lakhs. Alright. Perfect. Travel would be expense only if her GTI does not exceed 2 lakhs. So we can assume that it does not exceed, and that's exempt, or it exceeds, or it's taxable. So you just have to give your information to them, and that's how this sum will be done. I hope this is done, guys. The next one again here is, there is an employee. Compute the income from salary for Mr. X. There is an employee who has some salary, entertainment allowance, and commission. This is a fixed commission, so that is not C, it is OC. And entertainment allowance, this is not a government company, so there will be no entertainment allowance deduction. Government company owned accommodation, guys, so accommodation will be one percocet. Personal loan will be another percocet. And motorcycle. Motor car we haven't discussed the percocet, so don't worry about this. Remaining 1, 2 and 3, please try and do this. I'm giving you 2 minutes before we start discussing it together as well. I'm removing all these things, keeping it on the screen for you, except the third one. Try and do. Okay, actually the third one also we can do because it's a motor car, which is a movable asset. You can do all 4. I'm giving you about 3-4 minutes, and then we'll discuss it together as well. Alright, discussing this guys, Mr. X is employed with AB Limited on a monthly salary of 25,000 per month. So guys, when you start your income from salaries, the first thing will be 25,000 into 12. That will be the first amount. Remember SAP minus SEP. Don't forget 50,000. In fact, I'm already writing that 50,000 down so that we don't forget. Next, entertainment allowance of 1,000 per month. So entertainment allowance will also be added 1,000 into 12. But I will not get any deduction because that is only for government employees, and commission of 1,000 per month. So again, that will also be multiplied. So I hope this is okay. So these are your part of salaries. A company owned accommodation is provided to him. So it's owned by the company. So depending upon his salary, we will have to add it, etc. Furniture costing 2,40,000 was provided from 1st of August 2029. Now first we'll do accommodation and then we'll do furniture. A company on accommodation is provided to him in Delhi. Furniture costing 2,40,000 was provided on August. Guys, I'm assuming the accommodation was throughout the year. And he is in which city? In Delhi. So Delhi has a population of more than 25 lakhs. So it will be 15% of salary. Salary includes SAP, but S salary. A will be the taxable allowances and percocets, that is monetary. Doesn't look like there is any monetary percocet. The salary will be, the allowances will be taxable, and S will include everything. So I think this 25,000 into 12, that will be included. 1,000 into 12, that will be included. 1,000 into 12, that will be included. All these three will be included, and 15% of that. But anyways, since we can have other allowances also, let's finish all and come back to this one. A personal loan of 5 lakh on the 1st of July 2021, on which it charges interest at 6.75%. The entire loan is still outstanding, assuming the rate of SBI is 12.75%. Guys, now what is the beneficial interest rate? Is 6%. Because SBI is charging you 12.75, employer is charging you 6.75. So the beneficial rate is 6% into 5 lakhs into how many months? April, May, June. 3 months is not there, so 9 months into 12. So guys, if you can do this calculation, please. 5 lakh into 6% per annum into 9 divided by 12. How much is that percocet? Please tell me the amount. $22,500. Okay, so that is one percocet. I'll just check it also here, guys. 22,500. This is 25,000 into 12. This is 12,000 and this is 12,000. All right. Next, his son is allowed to use a motorcycle belonging to the company. The company had purchased this motorcycle for 60,000 on 1st of May 2018. The motorcycle was finally sold to him on 1st of August 2021 for 30,000. So guys, his son is allowed to use a motorcycle belonging to the company. The company had purchased his motorcycle on 1st of May 2018 and sold on 1st of August 2021. Now, guys, this is sale of a mobile asset. So how much is it sold to him for? For 30,000. So we will have to minus 30,000 from the depreciated value, and that we'll have to calculate. So 60,000 into how many years? So 1st May 2018 to 19 to 20 and 21. So 1 year, 2 years and 3 years. So you'll have to calculate for 3 years, you'll have to depreciate this, and it is 20% on WDV basis. So first year it will be 12,000. Let's do the calculation here only. Showing you the calculation, guys. Depreciated value, original cost is 60,000 minus 10 per annum. Oh, sorry, this is a motorcycle. My bad, guys. So this is a SLM. Motor car is 20%. My bad. 1 minute. So this will be, everything else is the same. Only thing, it's not a motor car. So it will be 10% per annum. 1 year, 2 years and 3 years. So 10% is 6,000. So 18,000 I will minus. So if I minus 80,000, this is 42,000. And you've sold it for 30,000. So the percocet value will be 12,000. So here we go. So this is the percocet value, 12,000. And before that, he's used the bike. Till 1st of August, he was using the bike. So April, May, June, July, 4 months he was using. So original cost 60,000 into 10% of original cost, that is 6,000, into 4 by 12. 4 ones are 4 threes are 3, 2,000. 2,000 for half the year is use the asset, and the remaining is sold the asset. So 1, 2, 3 done. What else is there? Professional tax paid by Mr. X is 2,000, so that will be SEP. So 2,000 will also be your deduction, SEP. I'm just tick marking 50 and 2. So 50 done and 2 done. Now only thing is rent-free accommodation. I don't have a calci today, unfortunately, so you will have to do the calculation for me. Now guys, for furniture, costing is 2,40,000 and from 1st of August. So 2,40,000 into 10% into April, May, June, July, 4 months is not there, into 8 by 12. Can you do this guys? 2,40,000 into 10% into 8 divided by 12. 16,000. Here we go guys, that is 16,000. So only now rent-free accommodation. So in rent-free accommodation, whatever amounts you've taken, you will take, except OD you will not take, except areas of salary will not take, which are anyways not there. So you will take everything else, and allowances you will take only taxable. There are no allowances, so basically you will add all these three amounts. So I'm just showing you the calculation here. Value of rent, 15% of salary, 15% of these three amounts, that is 48,600. So I'm just showing you that calculation here, and the amount here 48,600. So these are all the SAP, and this is SEP, and this is your taxable salary. Very good sum guys. I told you salary questions are great, but they're not too detailed. This one was only not on retirement benefits, it was a basic question. Again I repeat, only thing difficult here was definition of salary. So definition of salary, I'm repeating again for accommodation purposes, it is everything that is SAP, but salary, allowances that are taxable only, and percocets that are monetary. In this case we had no monetary percocets guys. We had percocets, but they were not monetary. This was a percocet, this was a percocet, but they were not monetary. That means they were not given in terms of money, they were given in terms of benefit, and there were no allowances. So all we had was this plus this plus this, which is basically salary. But not a very easy question, but still good to solve. Guys, here is another question, excellent question. It's a big question. It has leave travel concession, it has a motor car, it has facility of laptop, computer, professional tax, contribution to recognized Provident Fund, bonus, dearness allowance. It has a lot, and finally it has a question on compute the income chargeable to tax. Giving you 2 minutes first, 5 minutes first to actually just have a look at this question. Just try and figure which one is S, which is A, which is P. Over to you all. Please start reading and please start identifying SAP. Take 5 minutes and then we will discuss this together. Except motor car, we haven't discussed motor car yet. So except motor car guys, you can discuss, you can finish everything else. Alright guys, let's do this. Mr. Balaji, employed as a production manager in Beta, so that's basically an employee, furnishes the following information. Basic salary up to October, so April, May, June, July, August, September, October. So 50,000 into 7, that is 3,50,000 is B, plus 60,000 into the remaining ones, that is 5 months, November, December, Jan, Feb, March, is 3 lakh rupees. So basically 6,50,000 rupees is the basic salary. This is B. Of course you will tax it, but keep it in mind because BDC might be useful. Dearness allowance is 40% of basic. Guys, please, anyone with a calculator. Dearness allowance, DA, which is taxable, will be 40% of this. So how much is 40% of this? 2,60,000. Okay over there. Okay, Gayatri. So just checking 6,50,000 and 2,60,000. Just tick marking 6,50,000 and 2,60,000. Guys, they have not given whether this basic dearness allowance forms part of retirement benefits or not. So we don't know whether this is D or OD. So I've kept it blank here. Bonus equal to 1 month salary. It's paid in October 21 of basic salary plus dearness allowance applicable for that month. So guys, for October, your salary was 50,000. I'm just calculating it here. So your basic salary was 50,000. Can you do 40% of 50? I think that is dearness allowance, that is 20,000. So it was 70,000 and bonus is 1 month. So bonus was, I'm just writing bonus is equal to 70,000. Just tick marking that also from the next page. This is 70,000. So don't worry, even if you don't get, let's say, one thing wrong, one thing right, doesn't matter. As long as you're getting most of the steps right, you'll get your answer well. So this is done, this is done, and this is done. Guys, bonus and DA have not yet marked in BDC because we don't know. Of course, bonus does not come in BDC, but dearness, we don't know whether it's retirement benefits or not. Next, contribution of employer to recognized Provident Fund account of the employee at 16% of salary. So first, how much has he contributed? We will first add. Basic salary is 6,50,000. Can someone do 16% of basic salary? Contribution to recognized Provident Fund. 16% of 6,50,000 is how much, guys? 1,04,000. So first I'm adding 1,04,000, but there is an exemption under section 10(11) and 10(12), which is 12% of BDC. Now, because they've not given D, I can assume anything. Let's say I assume this not to be D and there is no C. So 12% will be exempt. So can someone do 12% of 6,50,000? 78,000 will be exempt. So the remaining, guys, how much is taxable? Can someone calculate this? $26,000 will be taxable. So let's check this also. Here, guys, employer's contribution to recognized Provident Fund in excess of 12% of salary is 26,000. All right, going back, guys, looks complicated, but once you go step by step, you will not go wrong. Professional tax paid 2,500, out of which 2,000 was paid by the employer. So if the employer pays your liability, is it a perquisite? Yes. So will you add this 2,000? Yes. First you will add this 2,000 and then you will minus 2,500 because it's professional tax paid. Next, facility of laptop and computers provided to Balaji for both official and personal use. Cost of the laptop and computer was acquired. So guys, if it's laptop and computer, doesn't matter. Even if it's for personal use, there will be no perquisite. So it will be a dash. They've not written it, but it should be a dash. Here they would have given the reason why they have not taken. Facility of use of laptop and computer is a tax-free perquisite, whether used for official or personal purposes. All right. Anything else? Yes, LTC. Let's check LTC. I'm not doing the car benefit right now. LTC. LTC given to employee, his wife and 3 children, one daughter age 7 and twin sons age 3. So first the daughter happened and then the twin. So all 3 will get the benefit. Yes. Cost of air tickets, economy class, reimbursed by the employer, 30,000 for adults and 45,000 for the 3 children. So the entire thing will be exempt. There will be nothing taxable. The entire LTC will be exempt. Perfect. So here guys, except motor car, which we haven't done, we'll discuss that in some time, but besides that everything else is done. Standard deduction, don't forget 50,000, and this is how you'll get your answer. Bonus was paid in the month of October. Basic salary is 50 and is considered for this calculation. It is assumed that dearness allowance does not form part of retirement benefits. Guys, you can also assume other way, but they have assumed and we also assume the same. Guys, next is the 5th question. All right. Perfect. Very, very good question. Again, guys, step by step, try and see what all you can understand. Again, the question remains the same. Telephone allowance, personal accident policy, conveyance allowance, gift voucher on marriage anniversary. These are different perquisites, so it makes a good sum. Try and do this first by yourself and then we'll discuss it together as well. Nice, this is a good question because there's a scale written here. What does this scale mean? The scale means that once you are employed at 20,000 rupees. And every year, once you complete 1 year, so from 1st January to 31st December, you were at a salary of 20,000, basic salary. Next, from 1st January 22, it became 21,000. So this scale is nothing but just telling you that every year it will increase by 1,000 till it reaches 30,000. So don't worry about the scale too much. Try and do this, and this year is 21-22. So 20,000 for 9 months and 21,000 for the next 3 months. Alright, let's do this, guys. From the following details, find out the salary chargeable to tax for the year, that is from 1st April 21 to 31st March 22, assuming that he has not opted for the provision of section 115 BSc, which we will see day after tomorrow or tomorrow in case of computation of income. Mr. X is a regular employee of Rama and Company in Gurgaon. He is appointed on 1st of January 2021 in the scale of 20,000. So guys, for the year, 20,000 into 9 months, that is 1,80,000, and 21,000 into 3, which is basically 63,000. That is his basic salary. So it should be 2,43,000. So here we go. 2,43,000 is the first amount. Next, he is paid 10% dearness allowance and bonus equivalent to 1 month's pay based on salary of March every year. He is paid 10% dearness allowance. So 2,43,000 into 10% is 24,300, which is pretty simple. And his bonus equivalent to 1 month's pay based on salary of March. So salary of March is the end of the year. So 21,000. Yes, and we are assuming salary is basic salary. So 21,000 will be the answer here. 21,000. So we've got B. Basic, I'm just writing BDC here in case we need it. Basic is 2,43,000. Dearness allowance, they've not said whether it's part or not a part of, so we can't comment on it right now. He contributes 15% of his pay and DA towards his recognized Provident Fund, and the company contributes the same amount. Guys, what you contribute is not an important, because what you contribute, it is a deduction under 80C, but what your employer contributes, that is important. 15% of his pay and DA. Basically, pay and DA means basic salary plus DA. So 2,43,000. You can do that math, guys. Here I'm talking about his contribution. So of his pay and DA, which is 2,43,000 plus 24,300. 2,67,300 into 15%. Guys, can someone do that? 2,67,300 into 15% is 40,095. So first this will be added, 40,095. They've straight away taken 3%. We'll also get the same answer anyways. But I like to go the traditional way here, guys, in this case. So 15%, but what is allowed is only 12%. Now they are again assuming, guys, that the DA here, they've assumed the DA is inclusive. Okay, so we'll take that as inclusive. And can someone do 12% of 2,67,300? 32,0676. Can you minus and tell me the difference? $8019. So this is the answer here, 8019. Guys, again here it's purely based on assumption, because they have not given us anything about DA. Here they have given it actually. DA forms part of pay of retirement benefits. So hence we've assumed DA to be D. Anyway, so this is 2,43,000. This is B. Always keep BDC in box. D is 24,300. And your bonus is 21,000. Your recognized Provident Fund is 8019. Alright. Next, he is provided a rent-free housing facility which has been taken on rent by the company at 10,000 per month. So guys, if in Gurgaon, which is basically a population of more than 25 lakh people, it's the rent paid is 10,000 per month or 15% of salary, whichever is lower. We'll do this calculation right in the end. Facility of laptop, this is not a percocet. Company reimbursed the medical treatment bill of his brother of 25,000 who is dependent on him. Brother who is dependent is family, but medical treatment bill, where is this medical treatment? We don't know. If it's considered as private, then this will be as a percocet added. So we can assume this is medical treatment. The monthly salary of 1,000 of a housekeeper is reimbursed by the company. So he is getting a housekeeper and is paid by the company. So 12,000 will be added as a percocet. So 25,000 and 12,000. 25,000 medical reimbursement, 12,000 is here. Alright, next. A gift voucher of 10,000, guys, if it's received in cash, then everything is taxable. So entire 10,000 will be taxable. Conveyance allowance of 1,000 per month is given by the company. So conveyance allowance, guys, is that allowance which you will add minus the amount that is spent. Actual reimbursement, conveyance spent on official duty. Actual, so this is the amount that is spent, so nothing is taxable. He's provided a personal accident policy which 5,000 is paid by the company. Personal accident policy should be taxable, but specifically the module only gives life insurance that is taxable, but we'll see. And he's getting telephone allowance at 500. Guys, telephone at home, I don't know if I've mentioned, but I think in this quick video we've not mentioned it, but telephone allowance, whether telephone is given at home, etc., telephone allowance is not taxable. So this 500 per month is not taxable. Oh, sorry, my bad. Telephone allowance is taxable, but if a telephone is provided at home, that is not taxable. So telephone allowance is taxable. Why have they not taxed personal medical? 1 second. They are saying personal accident policy is not liable to tax. So we'll assume that, guys, because nowhere in my module I've read something like this, but since it's given, we will take it. So assuming, guys, medical is also not taxable, personal accident policy is also not taxable. So what is taxable is only life insurance premium. All right. So going back, we got most of the things right. Only thing is the medical personal accident policy, that one, guys, because generally in real life no one takes a personal accident policy for employees, but since they've given it is taxable, we'll take that as non-taxable, we'll take that non-taxable. And telephone allowance, guys, just telling you, instead of telephone allowance, if this was telephone facility provided at home, then there is no percocet of that. All right. Anything else? Yes, rent-free accommodation. We just need to calculate now rent-free accommodation. Guys, in rent-free accommodation, we will take all the salary, the allowances which are taxable, and the percocets that are monetary. In salary, we will take 2,43,000. We will not take OD, but there is no OD. This is D, 24,300. We will take the bonus, that is 21,000. Recognized Provident Fund contribution is not to be taken. This is not a monetary percocet, but the voucher of 10,000 cash gift, that is a monetary percocet. And any allowance which are taxable, the allowance which is conveyance is not taxable. So these are the basic amounts which you have to multiply with 15%. I'm just showing you the calculation. Here, guys, for the purpose of calculation of rent-free house, salary includes basic salary, 2,400, 21,000, telephone allowance, because again this is an allowance which is taxable. We will not take conveyance allowance, and one more amount which we had taken, they have not taken, which is 10,000. Let me see why they have not taken that. A gift voucher. Okay, sorry, this is a gift voucher, this is not cash. If this was a cash amount, then this would entirely be taxable. So on this entire amount, it is 15%, that is 44,145, or the rent paid, whichever is lower. So hence the percocet value is 44,145. All right, perfect. Guys, just recapping and the learnings from this sum. This was easy, this was easy, this was easy, this was easy. Telephone allowance is one learning from the sum, because, guys, module sums get copied and a lot of these concepts come. So telephone facility and telephone allowance. Rent-free accommodation is okay. Medical reimbursement is assumed to be private. Reimbursement, this is simple. Gift voucher. Guys, gift voucher, I'll tell you two options which you have. If the gift voucher is worth 10,000 rupees, then you can take the excess also and you can take the entire thing. They've taken the entire thing. And of course, deduction is SEP 50,000. So this is the taxable salary. Okay. Guys, very, very good sum. And that is the end of all the sums. Perfect. So just 5 sums, but really good sums, guys. As expected, the module always comes up with the best questions. Perfect. In that the first question is very complicated to calculate, so I don't think this is expected in the exam. Just see the calculation, guys. So this is not an exam related question, this is more a math question, so I'm avoiding that. Alright, now what we'll do is we'll do some illustrations, guys, so that we get better on salaries in terms of our understanding, because I don't want to push on more and more today. I want to just complete salaries well. So let's see what all illustrations are there. Perfect. Yes. Guys, if the pay commission is appointed by the central government and it recommends revision of salaries of employees with retrospective date, that is called arrears of salary, for which you will get a relief under section 89. But guys, I forgot to mention something, that if you get this kind of relief, then you will not get 1010C retirement, voluntary retirement benefit. So one of them you have to choose. So either voluntary retirement, 1010C, or relief under section 89. Only one you will get in a year. Alright. Let's do more illustrations. Guys, Mr. Rajkumar has the following receipts from his employer. Basic pay, this is B, which is basically 4,80,000. I'm just putting it in a box because it is B. Dearness allowance 6,000 per month, which is basically 72,000 rupees. I can't put it in a box because we don't know. Commission is 50,000. This is definitely OC. Motor car for personal use, expenses met by employer. We haven't done that. We will do it very soon now. HRA 15,000 per month. So 15,000 into 12. Anyone, guys? 15,000 into 12. 1,80,000, I think. But you will minus least of the following. Amount that is received, 1,80,000. Or rent paid, which we will see soon now in this question. Rent paid minus 10% of BDC, or you are in which city? They haven't said which city. 40 or 50% of BDC. So BDC is very important. Out of BDC we know B, there is no C. D we'll have to see based on retirement. What is dearness allowance of? Find out the amount of HRA eligible for exemption to Mr. Rajkumar, assuming that he is paid a rent of 16,000 per month. DA forms part of, okay, so this is D, forms part of retirement benefits. So perfect. 4,80,000 plus 72,000, which is 5,52,000, which is my BDC. So now I've got all the answers. It is Kanpur. Okay, so 1,80,000 we've got. Rent paid, please multiply, guys, 16,000 into 12. What is 16,000 into 12? 1,92,000 minus 10% of this, that is 55,200. How much is that, guys? Can someone calculate? 1,72,800. So that also we've got. Second one. And last is 40% of salary. So what is 40% of 5,52,000? 72,000. So this is the least. No, guys, 40% of 5,52,000. 2,20,800. Perfect. So the least is 1,72,800. No problem at all. As the least is 1,72,800. Here we go. The actual amount received is 1,80,000. Rent paid, that is minus 10% of salary. They've got 1,36,800. How, guys? This calculation has gone wrong somewhere. Someone told me 1,92,000. Minus 55,200. I think this calculation has gone wrong. This is 136,800. No problem. So 136,800, no problem at all, Mayur. So 1,36,800 is the exemption under 1013A. Let's do more illustrations. The more we do, the better we get. So here we'll do more illustrations. Mr. Shrikant has 2 sons. He is in receipt of children education allowance of 150 per month for his elder son. So guys, 150 per month, and education allowance, so you can minus 100 per month. So 50 into 12 is taxable, which is basically 600 rupees for the first child, and 70 per month for his younger son. 70 per month, you can minus 70 per month, so nothing is taxable for the second child. He also receives the following: transport allowance 1800 per month, and nothing is spent, so 1800 into 12. Guys, can someone do 1800 into 12? 21,600 will be taxable because no exemption, nothing spent. And tribal area, generally in the exam they will give you in tribal area how much is the exemption, fixed amount. So here tribal area is 200. So out of 500, 200 you can minus. So 300 into 12, that is 3,600. So if you add up all these three, can someone add up these three? That should be your answer. 21,600 plus 600 plus 3,600, 25,800. That is your answer, 25,800. All right. Yes, here we go, guys. Mr. Sagar, retired on 1st of October 2021, is receiving 5,000 per month as pension. On 1st of February 2022, he computed 60% of his pension and received 3 lakh as computed pension. You are required to compute his taxable pension, assuming he is a government employee. So first, for a government employee, monthly pension is always taxable, computed pension is exempt. So what is a monthly pension? He retired on 1st October. He is receiving 5,000 as pension. So from October, November, December, Jan, 4 months into 5,000. Guys, he retired on 1st October and he's changing it on 1st Feb. So till Feb it's 5,000 per month, and then 60% is commuted. So 40% is still not commuted. 40% of 5,000 is 2,000 into Feb and March. So 20,000, 24,000 is taxable. Guys, I hope you understood how I got it. I'll repeat one last time. From October to January, October, November, December, Jan, it is 5,000 per month. Monthly, it is taxable under salaries. And from February and March, 2 months, 60% is commuted. That means 60% if you take in lump sum, that means 40% is still coming monthly. So 5,000 into 40%, that's how I got 24,000. Alright, perfect. And anyways, commuted pension is, so this is taxable, only 24,000 is taxable pension. Of course, you will get standard deduction also, but they have not asked, they have only asked taxable pension. What if he is a private sector employee and received gratuity? If he received gratuity, then only 1/3 of the commuted pension. So this will be taxable even for a private employee, 24,000. And commuted pension is 3 lakh. Guys, can you do this calculation? If 3 lakhs is 60%, what is 100%? 5 lakh. And 1/3 of that, because if he is gratuity, 1/3 of 5 lakh is how much? $166,667. Here we go. So if it's a private employee, 24,000 will be taxable, 3 lakh 166. So this is taxable. These are two amounts which are taxable. If he is a private sector employee and did not receive any gratuity, if he does not receive any gratuity, then the same thing, but half the pension will be minus. So this will be 2,50,000, half the total pension. So 24 plus 50, that will be taxable in the third case, 24 and 50. So guys, the moot point here is that this salary chapter is very, very demanding. It can suck off a lot of your time. Unfortunately, it does not convert to so many marks. Roughly about 2-3 marks are asked every year. If they are asked, not every year also, if they are asked, there are times when there is no salary question. But if it's asked, there are very basic salary questions. Let me show you. I'll come back to say 69th page, but let me show you something from an exam paper on how it is asked in the exam. Let's take a question from the exam on this. Let's take the Jan 21 paper and let's see what is there in salaries in the Jan 21 paper. In this case, there is nothing like salary here. There is nothing like salary in this first question. Nothing in the second also. Yes. Rajesh was employed in Axis Limited, Mumbai. He received a salary of 45,000 per month from April to 20th September. So April, May, June, July, August, 5 months into 45,000. Guys, can you calculate this? 5 into 45,000. 2,25,000 is till August. September, 20 days. So 45,000 divide by 30 into 20. Guys, can you tell me salary for the month of September? 20 days, 30,000. So this is a salary from Axis Bank, 2,55,000. He resigned and left for Dubai on 28th September and got monthly salary of equivalent 90,000 from 1st October to 31st March. His salary for October to December was credited in Mumbai bank account. Again guys, October, November, December, 3 months into 90,000, which is 2,70,000, will still be taxed in India because received in India. And guys, he becomes a non-resident. You've not done the calculation yet, but I'm telling you, he becomes a non-resident. So only this much salary is taxable in India. From January to March, his salary was in a Dubai bank account, so we can't tax it because for a non-resident, only their income can be taxable. The cost of his air tickets to Dubai, costing 1,50,000, was funded by his sister, so no problem there. And the cost of his initial stay at Dubai, 40,000, was funded by one of his friends. So there is no benefit here, which will be taxable. He further received interest, so on interest it will be added IFOS and he'll get 80 TTA deduction. FD he will not get any. LIC premium 15,000 he'll get a deduction for himself. For his spouse all he'll get, but for dependent mother he will not get. So guys, from this salary you've got your SAP. Can someone calculate and tell me what is the total? 5,15,000, 5,25,000, and from that you will minus 50,000 standard deduction. So 4,75,000 is income from salary. Let's check the answer guys. Salary is 2,55,000. Salary from October to December is 2,70,000. So total 5,25,000 deduction, standard deduction, and that's how we got 4,75,000. So it's very simple, the kind of questions that are asked from the salaries chapter. That's it guys. So I wanted to show you these papers so that you understand that how in depth salaries is asked. Of course we will prepare in depth, but before the exam try and not get succumbed to the pressure of salaries chapter. That's one sincere request. We will come back in 5 minutes and we will continue salaries chapter guys. We are looking at the illustrations and we'll do more on the illustrations bit. I think so we were here. Yes. So it's been a heavy day. Let's take 5 minutes away, come back and continue from this illustration here. This is gratuity, POGA, non-POGA. We'll compare that as well. Perfect. Thank you. Sorry guys, was logged out for some reason. I'm back and let's do this. We are a couple of questions away from absolute clarity on salaries. So let's do it. Guys, we're talking about gratuity, and if you remember, gratuity was a big thank you. So whatever amount you receive will be taxable. Of course, for government employees, completely exempt. Hence, surgeon loves government positions. And in this case, you will add the entire amount and you will minus the least of the following items. The first is the amount that is received. So gratuity actually received. The second is a big thank you, so 20 lakh rupees is a statutory limit, and the third is 15 by 26 as we had discussed, because this is 26 days and this is covered by POGA, so that one into into BDOD, basic salary and dearness, so only BDOD, and into number of months rounded off. So that is basically when it's covered by POGA. And what about when it's not covered by POGA? Everything remains the same, gratuity received or 20 lakh. But this one is basically becomes 15 by 38. And this becomes BDC, that is what I had mentioned also. And this becomes completed number of years not rounded off. And this is 10 months average BDC. Alright. So what are the changes? 36 becomes 26 becomes 30. BDOD becomes BDC, 10 months average BDC, and completed number of years is not rounded off, only how many ever are completed. Perfect. Alright, and there's a question on that. Let's do that question. Mr. Ravi retired on the 15th of June 2021 after completing 26 years and 8 months, basically rounded off to 27. He receives gratuity of 15 lakhs. So first, will you add that 15 lakhs? Yes. And will you minus the least of the following items? He is a private sector. So if it's a government employee, it's just simple. The entire 15 lakh will be exempt. It's covered by POGA. So let's do that first. So first is amount received, that is 15 lakhs. Second is the statutory limit, that is 20 lakhs. Or third, it's 15 by 26 into BDOD. Basically, what is their basic is 50,000. D is 10,000, that is 60,000, into completed number of years, that is 27. So this is the calculation I'm just showing you for the first one. So you add 15 and gratuity received 15, statutory limit is 20, or 15 by 26 into 60 into 27, which is 9,34,675, whichever is the least. This is the least. Now in the next one, this doesn't change, this doesn't change. Only thing is 15 by 26 becomes 15 by 30. I'm just showing you the next calculation, 15 by 30. It becomes last 10 months average BDC. So you will go to the last 10 months and you will take the average BDC. Here 10 months B, 10 months D and 10 months C into completed number of years not rounded off. So how many years completed? 26 years, 8 months. So that will be 26. And that's how you'll get the second calculation. And third, the government employee will be always exempt. So entire amount is exempt. Remember, again, gentle reminder that your salary sum, if they ask you such a sum, they have to give at least 8 marks, which they cannot afford. So hence they will give you a basic question and not so much of calculation. Anyways, leave salary is 10 AA when you're always around, which we've done already. It is basically the amount that you receive, or 3 lakh rupees, or the last salary into 10 or leave months pending. And for government, it's always exempt. 10 months salary on the basis of average salary for the last 10 months, and it is leaves pending in terms of number of months. Let's see a sum on this also. Mr. Gupta retired on 1st of December and received a leave salary of 5 lakhs. So 5 lakhs will be first added, and then you will minus the least of the following, which is A 5 lakhs, B 3 lakhs, and third, whatever is the salary, that is the last 10 months average into 10 into leave spending in terms of months. So let's calculate BDC 10 months and let's calculate this. These are only two things that we need to calculate. Basic salary is 5,000 per month. It is increased. 1,000 was increased with effect from 1st April 2021. He retired on December. So the last 12 months are November, October, September, August, July, June, May, April, 1, 2, 3, 4, 5, 6, 7, 8, March and Feb. So these 2 months and these 8 months, there's a small difference of 1,000 rupees. So you'll have to do an average. Basically, average means add all of them, divide by 10. Dearness allowance and commission. This is commission, fixed commission. So this is not C. Leaves availed during service is 480, and he is entitled to 30 days leave every year. So basically 30 days leave every year. How many years did he work for? Let's see. He worked for 20 years. So let's say leave spending in terms of month, 20 into 30 is 600. He's consumed 480. So balance is 120 divided by 30 is 4 months. So we've got this month, this amount ready. This is 4 months. This is ready, 10 months. This is ready. This is ready. So only when we get BDC, our answer will be completed. But guys, here again, this is a maths question. This is an average question, and honestly, something like this is not expected in the exam, because all you now have to do is plug in the numbers. 5,000 here, 5,000 here, then 6,000 here for the next 8 months. So this is just an average question. I'll just show you the average, how they've done. Salary of the last 10 months, 5,000 into 8, 4,000 into T, and then D, this is dearness allowance. Alright. Next is Provident Fund. Types of Provident Fund: recognized, unrecognized, statutory, and PPF. PPF is basically something that is not concerned with salary. Anyone can contribute into PPF. Even if I'm self-employed, I can also contribute into PPF. This is a question on PPF. Mr. A retires from service on December 31, 2021 after 25 years of service. Following other particulars of his income investments for the previous year 21-22. What do you need to find? What is the taxable portion of the amount received from unrecognized Provident Fund? Guys, unrecognized Provident Fund, everything is taxable. Whatever you get from unrecognized Provident Fund is taxable. So amount taxable under the head salaries and amount taxable under the head IFOs. Whatever is the interest on your share, that is as IFOs, otherwise it is taxable under the head salaries. So everything is taxable. Whatever you get will be taxable. So 2,20,000 is taxable, 50,000 is taxable. Your own contribution when you get back is not taxable because it's already taxed once, and interest is taxable. So these three things are taxable. I'll repeat, guys. In an unrecognized Provident Fund, if the employer puts money, it's not taxed. If you get interest on that, again it is not taxed. And if you get interest and your contribution, again when you receive this final amount, then it is taxable. And how it's taxable? Whatever you get from your employer is taxed under the head salary, and the interest you get on your contribution is taxed under interest. No exemptions, no, because the government does not get to use this. This is a combination of all. Mr. B is working in XYZ Limited, has given the following details. You are required to compute his gross salary from the details given below. And let's go through this very, very nicely. Basic salary, this will be into 12, and that will be B. DA, 50% for retirement benefit, this will be into 12, and 50% of that will be D. Commission as a percentage of turnover, this will be into 50 lakh into 1%. 50 lakhs, 1% I don't have a calculator, but it should be 50,000 and that will be C. It's 5,000. 1 second. 50 lakh. 10% is 5 lakh. 1% is 50. Yes, 5,000. My bad. $5,000. Then that will be C. So we've got B, we've got D, we've got C. Bonus is taxable straight off. Gratuity, if received during employment, is always taxed. Any of the retirement benefits received during employment is always taxable. His own contribution to recognized Provident Fund, this is not taxed because it's already taxed in salary. When he puts it again, in fact, he'll get a 80C deduction. Employer's contribution, 20% of basic you will calculate. So what is basic? 1,20,000 into 20% is what is being contributed, so that you will add, and minus 12% you will minus, because only up to 12% of BDC is allowed. And same thing, interest 13% you will add, and up to 9,500 it will be exempt, rest will be taxable. Here we go, 9,500 is exempt, rest will be taxable. 12% will be exempt, rest will be taxable. Don't worry about too many confusing concepts, guys, here. Okay. Mr. Datta received VRS compensation of 7 lakhs after 30 years and 4 months of service. So that 7 lakhs will first be added. An exemption will be list of 4 things. One is the amount that is received, that is 7 lakhs. Second is a statutory limit of 5 lakhs. Third is the salary. You will look back the years completed into 3. And fourth is salary into number of months till retirement. So here we go, compensation actually received 7 lakhs. Statutory limit, that is 5 lakhs. The salary into the salary into completed number of years of service into 3, and the salary into number of months remaining till service, that means till retirement. And salary, guys, here is B, this is B, and this is D, there is no C. If you see, basic salary is 20,000 and dearness allowance is 5,000, so it's very, very simple here. These are all the different perquisites. Mr. D went on a holiday in December to Delhi, and his wife and 3 children, one son 5 years and twin daughters 3 years. Guys, twin daughters were born later, so all the 3 he will get, yes, for all the 3 he will get 60,000 entirely he will get. The entire reimbursement is fully exempt. And what if the twins were first and then the son? Then in that case, only for 4 people, for the son he will not get. Very, very simple. Guys, I'm giving you 3 minutes. Please try and figure which one is taxable, which one is not taxable in this list. This is medical treatment. Over to you all, please. Alright, let's do this. Medical premium paid for ensuring the health of Mr. G. Mr. G is the person in question. Medical premium is not taxable. Treatment of Mr. G by his family doctor, it's a private thing, so taxable. Treatment of Mrs. G, that is wife, in a government hospital, not taxable. Treatment of Mr. G's grandfather, which is not a relative, also private, so hence definitely taxable. Treatment of Mr. G's mother, family doctor, is private, so taxable. Treatment of Mr. G's sister, dependent in a nursing home, private, so taxable. Treatment of Mr. G's brother, independent, guys, here it's not family, so taxable. Treatment of Mr. G's father, abroad, guys, abroad the treatment is exempt, the expenses are also exempt provided the limit of RBI says 75, you spent 80, so 5,000 will be taxable, else exempt. Limit of RBI is for both, guys, treatment and expenses of staying abroad. Alright, so 5 plus 12 plus 8 plus 3 plus 6 plus 5, 5 plus 5, is there anything we are missing out on? 1 minute. Okay, they've given different, so 39,000 is the total. 6,000, do we have 6? Yes, we have 6. Do we have a 12? Yes. Okay, so they've given it differently, but the answers are still the same. Can we just total up the answers, guys? Can you just total up all the boxes? 5, 12, 8, 3, 6 and 5. 26. Looks like 39 only. 39,000, perfect. And here also is 39,000, so absolutely right. Guys, Mr. C is a finance manager in ABC Limited. The company has provided him with rent-free, unfurnished accommodation in Mumbai. He gives you the following information. Guys, this is Mumbai, unfurnished. So basically only for accommodation, you have to calculate 15% of salary. Salary again is everything except OD you cannot take. Any arrears, etc. you cannot take. Basic will you take? Yes. Dearness, 30% only you will take. Bonus you will take. And only from November you will take. So November, December, Jan, Feb, March, all the calculations for 5 months. So here we go. 15% of salary, 5 months, 5 months and 5 months. Alright. If he pays a rent of 1,000 per month, then from whatever the perquisite value is, 1,000 per month will be minus. So 1,000 per month into 5 months, 5,000 will be minus from this. Alright. All these are pretty simple. Remember, government employees only license fees, guys. If a television is given and 2 air conditioners are given, whatever rent paid by the company, guys, this is basically furniture. So our furniture, if it's rented furniture, then whatever rent it is paid will be the perquisite, and if it's own furniture, then 10% of original cost will be the value. Perfect. And if it's a government employee, then the license fees determined will be considered. Perfect. Guys, these are very simple. Domestic servant, again domestic servant, so both of these are perquisites because you are getting a domestic servant and the employer is paying for it. This is a combination of a lot of things here. He is retiring and these are the combinations. This is a detailed sum, but nevertheless, let's try. This is the last sum that we'll do, guys. After that, we'll open up for any question that you have. I'm giving you 5 minutes first to try and then we will discuss. This is basically like a summary question of everything that we've done till now. Alright guys, let's do this. Mr. X retired from service of a company on 31st January 2022. After completing 30 years and 1 month, so basically the number of completed years and round off both are 30 years only. He had joined the company on the 1st of January 1992 at the age of 30 years and received the following on his retirement: gratuity, that is 6 lakh. He was covered under POGA, so you will add 6 lakhs. First, amount received, that is 6 lakh, or second, 20 lakhs because gratuity is a big thank you, or third, covered under POGA, that means 15 by 26 into BDOD. So basic, they've not given us a salary here, but basic and dearness and OD, BDOD into completed number of years rounded off, that is 30. I'll just show you the calculation here. He has drawn a basic salary of 20,000 and 50% dearness per month. So basic salary here we go, gratuity 6 lakh is received, actual gratuity received, or 20 lakh or 15 by 26 into the last salary drawn, that is BDOD, that is 15 by 26 into BDOD, that is 30,000 into 30. Completed number of years rounded off is the same. So 30,000, how did we get? I'll just show you how did we get that. It is 20,000 rupees and 50% dearness allowance for the month. They've not spoken about, yes, dearness allowance is anyways BDOD, so the entire thing will be taken. That's why 30,000. All right. Next, leave encashment of 3 lakh 30 for 330 days leave balance in his account. He was credited 30 days leave for each completed year of service. So basically, again you will take 330 and you will minus least of the 4 as we have discussed. In that you will have leaves pending in terms of months. Offered a car which was purchased by the company for 5 lakh. Company has recovered 2 lakh from him. So you will find the depreciated value of the car. How many years have you been used? Purchased in 2019 and giving it to him in 2022. So 19 to 20, 21 and 22, will it be completed? Yes, on 30th January. So 1, 2 and 3 years at the rate of 20% WDV you'll have to calculate. Again guys, just saying this kind of sum will never come. If you try and get into salaries, you'll never get out of salaries because this is the kind of complication that ICAI module gives you. But in the exams, never has these kind of questions be asked ever. Anyway, an amount of 3 lakh as commutation of pension for 2/3 of his pension commutation. Lump sum amount of 3 lakh is given. If this is 2/3, what is 3? So if this is 66.667%, what is the 100%? And then out of that, half of that will be exempt. 1/3 actually, because he's also getting gratuity. Received a gift voucher of 6,000. So you can either add 6,000 as a perquisite or 1,000. That's upon you. His colleagues also gifted him a television set from their own contribution. There is no problem with that. And received pension of 5,000 per month. So whichever months you've received pension for, basically 2 months, it will be added. So that's how basic, dearness, gift voucher, transfer of car, gratuity, leave encashment, uncommuted pension, 2 months. And of course you will get standard deduction here, commuted pension. Perfect. Guys, my sincere suggestion is don't complicate. Honestly, I did not even want to do salaries today. I wanted to do it as the last thing, but a couple of you all mentioned salaries, so hence I took it up. Because this is what happens when we get into salaries, we lose confidence about everything else we've done because of the massive complications there are. Perfect. Another very big question. But not complicated, just looks big. This is the last question that we will do and then we will end. Everyone, let's do this last question on salaries. Motor car perquisite we will discuss, not right now, we will discuss tomorrow. Last question right now on the screen here, please. Alright, discussing the last question for the day, guys. Sri Bala, employed by ABC company, has a finance manager, gives you the list of perquisites provided by the company to him for the entire financial year. Domestic servant was provided at the residence of Bala. Salary is 1,500. The servants are engaged by him and the salary is reimbursed. So you are enjoying services of a house help. So this is a perquisite into 12. Free education is provided to his two children, Arthi and Ashok, in a school maintained and owned by the company. So the cost of education is computed at 900 per month, and for Ashok is 1200. So for 900 you will not add anything because you can minus 1000 per month, and for this one it is 200 into 12 because you can minus 1000 per month per child. Next, the employer has provided movable assets such as television, refrigerator and air conditioner. The actual cost is 1,10,000, so you will add 11,000. A gift voucher worth 10,000 is given on the occasion of marriage anniversary, so you can add 10,000 or you can add 5,000, it's your choice. Telephone was provided at the residence. This is not a perquisite, telephone. Housing loan at 6%, the amount outstanding is 6 lakh. And Shri Bala pays 12,000 per month. Again, guys, the rate of interest is to 10% of SBI, so the beneficial rate is 4%. But now you'll have to calculate this monthly. So again, this becomes a mathematics sum. Here, amount outstanding on the starting of the year. So the first month you will have to calculate 4% into 6 lakh into 1 by 12 and so on. Every month you'll have to reduce 12,000 and calculate. Again, this kind is never expected in the exam because this calculation alone will take you about 10 to 15 minutes. So they'll have to give about 6 to 8 marks. I'll just show you the answer here. Domestic servant, educational institution, only for one employee, only for one person, otherwise 1,000 per month can be reduced. Movable assets, 10%, that is 11,000. Value of gift can be taken as 5,000. Alternate view is you can take 5,000 or you can take 10,000. Telephone is not a perquisite, which is taxable. And guys, this is the calculation of interest. Again, not expected something like this. But you should know every time it reduces 12,000, the interest will also keep reducing. The interest is 4%, which you absolutely rightly identified. Perfect. Alright guys, with that we are coming to a close to salaries. I don't want to get into more salaries. In case we get time in the end, of course we will do all salaries questions from the exam papers. But in case we get some time more, we'll delve in more into salaries. But right now I will have to put a stop to salaries questions. When I see you guys tomorrow, we will enter into the world of TDS, TCS Advanced Tax, which is super important, guys. TDS is a chapter where every year about 6 to 8 marks comes in the exam. TDS, TCS Advanced Tax, and we will also do return of income. We'll try and finish most of the paper, most of the portion tomorrow, so that day after tomorrow, all we can do is more and more sums, more and more MCQs, more and more revision. If you have any questions, right now is a good time. Otherwise, good night and see you guys tomorrow for the next leg. Thank you.